Hey everyone, welcome to another week of Super Prime UK with your Super Prime valuation specialist, myself, Rob Cohen.
And myself, James Wild.
Hope you're all well, hope you've got through another week, lots happening. Straight into the data, James, let us know what is the latest updates, please.
Yeah, thanks very much, Rob. So another positive week in terms of the UK London property market. New instructions, Rob, we've had a slight increase, 334 this week, which I think the market and certainly the active agents in London have been crying out for. 334 new instructions this week, and sales up on last week, 146. So we're in that sort of sweet spot, just in and around 150 per week, Rob. The market is being steady despite some of the sort of global market conditions, obviously unrest in Eastern Europe.
Yeah, all the banks have been calling in the last week, asking the question, Rob, what is going to happen to the market, especially super prime, with the uncertainty around the Russian buyers and the Russian wealth and lots of discussions around that space. So creating lots of uncertainty, and with uncertainty, market conditions can change quite rapidly. So a lot of concern out there, and all the banks have been calling, asking for an update on that space, as we discussed in last week's show.
Yeah, thank you, Rob. So we focused on the sort of super prime London last week, and then just in terms of more of a macro level this week. I mean, the pandemic property boom, Rob, that we've witnessed in the last 18 to 24 months, it's largely been fueled by those low interest rates, the cheap mortgages on the back of that low base rate, the race for space, people moving out of those sort of town centre locations to get more space in the sort of suburban areas, and obviously we had the stamp duty cut for a period of time. All those factors fueling the UK and London property market. This week, Rob, we've had the Nationwide released its data in terms of its house price index. Prices were up 12.6% up to February 2022. So that market on a macro level is continuing to perform exceptionally well, being double-digit growth there, with the average cost of a house being £260,000. And again, looking on a macro basis, the average home is 20% more expensive than it was in February 2020, just before the global pandemic. On the back of that, Halifax has also released its house price index data, showing an annual growth rate of 10.8%, slightly lower than the nationwide, although the index coming in slightly higher at £278,000. Those indexes just working off slightly different data there. Rob, on a side note, it's one of your favourite topics, but the house price to earnings ratio is at its highest ever, 6.6 on the ratio, and pre-pandemic we're at 5.9, and at the last serious financial crisis before COVID in 2007, this house price to earnings ratio was at 6.4, so we're at 6.6 now. Beyond that, the government has introduced some 95% mortgages. It's had Help to Buy out there for quite a few years now, helping those first-time buyers to get a foot on the property ladder. The market now really relies on some of these incentive schemes to boost the number of transactions, get people into home ownership, and those first-time buyers of unlocking capital expenditure into the multiplier and UK economy. Hey, Robert, in terms of if any of these incentive schemes would be withdrawn from the market, I think they would be quite severely affected. But is there a solution or an answer to this at all, Rob?
I just think, and as many commentators and property specialists believe, that we just have to continuously build and create more stock. More stock is the solution to allowing pricing to function and availability to function, and try to fill in those gaps again with schemes around affordability, etc. So I think there has to be a big surge now in the coming years, and increase the volume of housing stock, especially new build housing stock.
Yeah, definitely in terms of a supply shortage, supply and demand issue there. And I think what we really need is some sort of quite slow and steady price growth, allow those wages to catch up over the next 2, 3, 4, 5 years, really. We don't want those boom-bust cycles at all.
Yep.
But as you said, Rob, I think we're going to see more modern methods of construction, which are going to be pushed into the market, either through material shortages, which we've seen in the last 24 months. We've seen the rise, the cost of materials, and also, like you say, Rob, that shortage of supply, that's going to be really pushing house builders in terms to construct houses at a faster rate and improve that supply issue.
Yep. I mean, I think we just need, I suppose, we need everyone in the industry to pull together. I think, we need collaboration between NHBC, UK Finance and the UK lenders, and approving and guaranteeing any new innovative property construction solutions. I just think everyone has to take responsibility, and hopefully that achieves the goal of building more homes.
Yeah, I think that's got to happen. Those modern methods of construction, in terms of there being added pressure from the government in terms of the minimum EPC requirements. I know there's sort of the draft consultation bill of that rising to a level C in order to rent out your house. That's under sort of draft consultation, or would be sort of quite a radical change, really, in terms of the makeup of the UK housing stock being a lot of Victorian terraces and things, which would really struggle to make that EPC banding.
Yeah, I mean, I repeat that the only way that's going to happen is with cross-industry collaboration, NHBC, UK Finance, working together with the construction companies and the builders in an effort to achieve all of the goals and targets that have been set out. And I think those issues, both with shortage of stock and hitting those targets, as you've mentioned, through new build and modern methods of construction, cross-collaboration is the way forward.
That's it. Thanks, Rob. We just want to refocus on more of a macro look at the UK housing market this week.
Brilliant. Thanks, James. Really appreciate it. Short, sharp and punchy. A lot of uncertainty out there at the moment. The market continues to move on. Inflationary pressures continue to have an impact on the cost of living day by day, and we will see how that will affect the market over time. Thank you for all your support as always. Keep following, keep engaging, keep asking the questions on all of the socials and the podcast as well. Appreciate great support there. And we will see you next week, and everyone take care and look after yourself. Thanks, James.
Thanks, Rob. Thanks so much, everyone.